China is collapsing again. It's actually quite funny. One day China's collapsing. Tomorrow, China's the rising superpower that has to be countered. Get your propaganda straight, guys. Come on. Come on. But China is having a bit of a trouble at the moment, if you will. Of course, the Evergrande collapse is just a part of that story. But China is entering into deflation. And that could have effects for everybody. So let's talk about it. So this BBC article points out some pretty interesting stuff. Let me read you a few parts of this. China's economy has slipped into deflation as consumer prices declined in July for the first time in more than 2 years. The official consumer price index, a measure of inflation, fell by 0.3% last month from a year earlier. Analysts said this is pressure on the government to revive demand in the world's second largest economy. This follows weak import-export data, which raised questions about the pace of China's post-pandemic recovery. The country's also tackling ballooning local government debt and challenges in the housing market, youth unemployment at record high, etc., etc. So why is deflation a problem? China produces a large portion of the goods sold around the world. A potential positive impact of an extended period of deflation in China may be that it helps to curb rising prices in other parts of the world, such as the UK. However, if cut-price Chinese goods flood global markets, it could have a negative impact on manufacturers in other countries. That could be problematic because it can hit investment by businesses and squeeze employment. Remember, what happens in China has echoes around the world, good and bad, right? A period of falling prices in China could also hit company profits and consumer spending. This may then lead to higher unemployment. It could result in a fall in demand from the country, the world's largest marketplace, which is also a very big problem because that affects energy markets, that affects raw material markets, that affects food markets, that affects a lot of markets. That could hit global exports big. What's that mean for China's economy? China's economy is already facing other hurdles, recovering from the pandemic, et cetera, et cetera. China is also dealing with the property market crisis, the Evergrande story, of course, and a lot of other things. So this deflationary pressure coming in China is a big deal and does have a lot of investors worried right now. The Evergrande story is just the tip of the iceberg when it comes to the Chinese property market insanity. We're seeing a lot of crazy stuff happening in Chinese markets right now. Deflationary pressures, pressure on the yuan, political pressure, pressure from the United States over Taiwan. A lot of stuff going on here. A lot of stuff going on here. As Sophia Costa points out here, China's property slump looks far worse than official data suggests, which is something that we see as a common thread from China, where official data says one thing, real data may be a bit of another. Since the peak of 2021, home prices are down at least 15% in prime areas of Shanghai and Shenzhen, about 25% near Alibaba's HQ in Hangzhou. Chinese property markets are nuts because so much of Chinese personal wealth is in property. So seeing massive corrections in the property market puts a lot of pressure on anybody who has mortgages, but it also puts a lot of pressure on household wealth. Remember this idea of the wealth effect, right? So when the value of your property goes up, you feel richer. So you have an investment property, you bought it for $1 million, now worth $1.5 million. You go out and buy some stuff. I'm rich, baby. I got an extra $500,000. You start spending those unrealized gains. You buy a new car, you buy something nice for the missus, et cetera, et cetera. Then your property price comes down back to $1 million, and suddenly you don't have the extra $500,000 of equity anymore. But now you got all the stuff you got to pay the bills on. It's problematic what's happening in the Chinese property markets right now. Also, it's going beyond property markets. So Chinese asset manager signals debt overhaul, stokes contagion fears. And this is what you start getting worried about. When you see all these things starting to happen, you start to worry that it's going to spread. So a company called Zhongji Enterprises, which I've never heard of before today, but they are apparently a $137 billion asset manager in China. Well, they're in a bit of trouble. They're talking about restructuring in a recent investor meeting. Yikes. So that's problematic. That's very problematic. Of course, they have exposure to the country's real estate sector. So we could see major asset managers going down in China. The Chinese property market continues to capitulate. It creates real problems. As Gareth Soloway points out here, shares some interesting data. Second largest economy, China is in deep trouble. Retail sales missed 2.5% versus 4.5% expected. Industrial production missed 3.7% versus expected 4.4%. Fixed asset investing missed 3.4 versus 3.8 expected. Remember, when China reports numbers, economists assume they are far worse than those that are actually reported, so things are not good in China. In addition, China stopped reporting youth unemployment numbers, which are estimated to be about 20%, which is crushing number here. China's central bank just cut interest rates as well in a surprise move from 2.6 down to 2.5%. China is trying desperately to spark the engine. They're there. They got their ether out, man. They're spraying it in there. Trying to get going, pulling the chain, like, come on, engine, restart, China. Come on, let's get it going. It's not working yet. That means, and I agree with Gareth here, China is going to have to start printing even more. Because what is the solution that governments always run to when they get into trouble? Print more money. Not every government can do it. China can do it. China will do it. Remember, Chinese money printing is what led us out of the bottom back in November 2022. China's money printing has been a big factor of markets this year. China will need to print. China will need to print bigly. It's coming. It's coming, guys. Now, before we get into the rest of the China story here, just a quick note. If you are looking for the next big things in the altcoin market, well, you need to have the skill set to find those next big things. That's why I made the course, Mastering Altcoin Investing. This course is designed to help you with the altcoin basics, of course, but also how to understand the fundamental, technical, and philosophical concepts behind altcoins. Also, how to get into token sales, how to find airdrops, different approaches to investing, strategies on how and why to buy and to sell, looking at market cycles, trader psychology, how to take profits, how to pay your taxes, all that kind of stuff. This is the course that I wish I'd had when I started altcoin investing. Look, in these current market conditions, altcoin investors who can find the gems are going to be the ones cashing out for millions 2024, 2025. Not financial advice course, but check out the course, link down below in the description. It's an awesome course. You'll love it. Go check it out. Okay. Here's Kathy Wood weighing in on the deflation situation. Kathy says, China is exporting deflation in a more profound way than I believe in many economists and strategists can appreciate. All else equal, the 15% depreciation in the yuan relative to the dollar in the last year should have increased its PPI inflation rate by 15%. Instead, it has dropped by 4%. In other words, the deflationary vortex emanating from China is approaching 20%, 15 plus 4%, highlighted by the burgeoning defaults in Chinese real estate and trust companies. After it entered the World Trade Organization in 2001, China's real GDP grew at a double-digit rate for nearly 20 years. Rapid growth can cover many economic sins, typically excessive debt and associated leverage. Those excesses are surfacing in China right now. China probably wants to limit, if not stop, the depreciation of the Chinese yuan. To do so, it could be selling US dollars and buying yuan, effectively tightening its monetary policy and exacerbating the economy's weakness even as it is easing. She said, in our view, the view of ARK Invest, the Fed has precipitated and exacerbated the risk of a global deflationary bust. The impact of its record-breaking 22-fold increase in the Fed funds rate could be hitting China first and spreading to the rest of the world. The dollar is once again proving itself to be a beast and a powerful, powerful weapon. Perhaps, tinfoil hat, perhaps the raising of these interest rates, the breaking of the banks, you losing your job, slow down US, all this stuff was just a byproduct of them going after China. Knowing that raising the rates would put a lot of pressure. Interesting thought. Would not surprise me. Lisa Abramovich pointing out that Citi's Johanna Chow says China is headed toward Japanification based on policy responses so far, which look too restrained. Compared with Japan in the mid 1990s, China's future growth prospects may be decelerating more sharply without growing, enhancing structural reforms. Yikes. Yikes. That is not what you, well, for China, a yikes, obviously, because what happened to Japan? Japan stagnated for decades. China does not want to go down the same path. It wants to continue going up. It needs to make some big changes. It needs to print. It needs to print. And when China prints, we all eat, baby. That's what happens. Hedge funds, of course, foreseeing the Evergrande collapse, started dumping Chinese stocks aggressively, which brought Chinese markets down. The Shanghai Composite Index was down, along with, of course, global equities in the last week. Crypto markets, of course, ouchies today. But hedge funds were getting out of Chinese stocks. In fact, it got so bad that China ordered funds and banks, stop selling your stocks, damn it. Cool and normal, China. Hey, when the going gets tough, just tell people not to sell their damn stocks. Markets can't go down if you guys just stop selling. It's one way to do it. And hey, we can laugh at China for doing that, but come on, plenty of other countries have done that too. Plenty of other countries have done that too. Plenty of times where we've seen them saying, guys, could you just stop selling stocks, please? That'd be great. That'd be great. Why is it always the same people causing the same? Always China out here causing problems. And just print the money, guys. Just print the money, China. You'll solve all your problems. Just let the printing into your life. That's all you need to do.